Hi and welcome to this live currency strength indicator table video with me, John, on this Friday the 28th of July. Here you can see I have our live currency strength indicator tables in front of us, and it has been a bit of a whirlwind 24 hours. And I was just having a little chat with Charles, and he wanted me to show you this table which basically shows us how the market has shifted over the past few hours, or overnight really, because we've just saw a huge change in the tables. At one point we had, at 9 o'clock, we had the Australian dollar as a strong currency versus the US dollar in particular. By the sort of 5 p.m. it had pretty much eroded from that day trader side of the table, appeared on the weak side of the table, and it just basically fell away. And we've seen that then continue into this morning with regards to the current tables, where we can see Aussie's actually now the weakest currency. So there's been a lot of situations here where we've seen the market switch quite aggressively, and these tables are a fact. They're not an opinion on the market, they are fact, and it's telling us basically that we have those end of month low volumes, and it showcases the high volatility in the market. So when we have that high volatility, low volume situation, basically it takes less market participants to push the markets in particular directions, and that's what we've seen. We've had some high impact news data as well, which is helping sort of drive that low volume, high volatility scenario. We've had some data out of Japan overnight, and especially the CPI, which excluded volatile food and energy, came in at 0.5% above a minus 0.2%. So the yen has gained some strength off the back of that. Now, in these type of markets, though, it's very, very difficult to make any kind of set judgments in the market. And I was looking at Aussie US dollar long yesterday. That didn't come into fruition. We had the high impact data. It basically, got entered, got stopped pretty much within the hour. So that's how aggressive these markets can move in these type of end of month situations. And you can see here I've got Aussie yen up at the moment because Aussie yen tops our day traders table, but to make a call on that would be a little bit silly at the moment due to the fact that of all this sort of situation I've just explained. And you can see here price came into that sort of 92.50 area. It's come into the 200 moving average, and we've already bounced around about 95 pips from those lows. So even though prices has moved very aggressively overnight, we're starting to see a little bit of a recovery to that now. So to try and suggest getting short on Aussie yen right now may not be the thing that we look for. Obviously we're looking at it because it is on the tables, but we have to just make you aware that in these type of market environments it can be very difficult to pick out key areas to look out for and what could potentially happen at those key areas. Now obviously the tables are saying Aussie yen short. Would you get short at this current moment in time? Probably not. I'd probably wait for the dust to settle, probably go into the new month and see what we get out of that and start of that new month, whether we do get this yen as a sustained currency or not. Now just from a technical perspective, like I said, we are above that 92.50. If we go to the weekly chart, we've just come back basically to prior weekly highs, which are these highs here at that 92.50. So there is still a chance, if the market sentiment shifts once again because of the situation we are in, then we could see another shift where Aussie comes off the table, comes back to strong, yen goes off and comes back to weak, and Aussie yen goes long from here because it's a really strong area of support. So I wouldn't touch this one, to be honest, at this moment in time. Very similar to other markets as well. Now if we go take a look at euro yen, for instance, Euro yen very similar. Euro yen a little bit cleaner than the other charts, to be honest. We did have some ECB data as well, and the markets kind of took that in a negative light. But we had some really strong GDP figures out of the US, and that also pushed the euro dollar price lower, in turn pushing euro lower as well. And you can see we kind of double topped at the 158 handle. We traded through the 153.75, and you can just see by the ATR numbers here from Chart Partner. So the 3-week rolling ATR is 174. Look at the 1-day ATR, 352. That's like double the 174 3-week ATR rolling. And so you can actually see this visually on the chart as well. Look at the past 2 days of price action. We've absolutely smashed the ATR of euro yen, and this is really giving you another perspective of those end of month flow volumes, the high volatility in the market, and that 150 at the moment is being tested as support. So very, very tricky markets to trade at the moment. I wanted to showcase the tables that Charles sent me as well, just to show you that the market's gone a little bit mad with this data, and you know, it could do the same going into next month as well. So if you did have a little bit of a difficult time, then don't worry. You know, it's just one of those things that can happen sometimes where you get this aggressive movement in the market. But I hope you enjoyed all the content this week. I hope you found it useful. I hope you learned something from it, and I will catch you in the next one next week.